We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. We are back in the studio with Jordan Tampien, 4 Degrees Real Estate. Jordan, thanks again for showing up today. It's been awesome hanging out with you. We want to dive into some deals. You ready for this?
I love it. It's the best part.
Right. So good deals, bad deals. We'll let you start with whatever one you want. You want to start on the bad?
So yeah, what I'll do is I'm going to give you just the class of deal you want to see. So in my world, I've done everything from entitlement, good and bad, townhomes, good and bad, duplex communities, build for rent, good and bad, historic rehabs, apartments, good and bad, commercial rehabs, historic, good and bad, and then ground up garden style, good and bad, and then geographically located, good and bad. So you tell me which class of those you want.
Mark, what do you like?
Do you want apartments? Do you want single family?
I think the gritty's going to be like the historic apartment renovation.
Okay. Then that'll be, I'll save that one for the bad one. So I have a fun one. I'm going to do the fun one because I think it's pretty cool. So there's a amazing lake in North Idaho called Priest Lake. Hopefully you guys don't try to move there. We don't want to overpopulate it, but it's amazing. If you ever get a chance, it's awesome. And so we have a place up there, and I walked by this 4-acre site, had these 10 houses that were half built for over 12 years. And I've walked by it for 2 years, and I try not to develop where I relax. It's a good rule of thumb if you don't have it already. And I keep walking by, and I'm like, somebody's got to do something. At this point, somebody's got to do something. And so it's listed. We go in. So what happened was they had sold it on an owner contract to a church who built the infrastructure and then lost all their money. So this guy took it back, finished 1 unit, and then the rest just kind of shelled it in. Again, Northern Idaho, heavy snow, the worst weather for a shelled building. And so we ended up picking up the whole thing for $4.8 million, and then partnered with our contractor to come in. And so we have about $1.2 million budget to put it together, and came in. Obviously, the siding, everything on it had to be ripped off. Things we thought would be good weren't. And one of the key features with it is it had this boat slip marina we could put in. And so we were able to put 34 boat slips, renovate the 8 cabins, and then build 20 more cabins behind it. And then the other big feature was it was all on sewer, and they can't expand capacity now. And so it turned into one of these deals where we got it done, ended up, we're under contract on all 8 of them. We're selling the front 8 for $1 million each.
And you rehabbed it for 1.2.
And the total, all 8 of them for 1.2. And so we're selling each of those for $1 million each, and finished the entire dock system. And so then we're going to move to the back with free and clear land, and then we'll build each of those for about $350,000, and then we're selling anywhere from $850,000 to $1.05 million.
How big are these things?
So 2,000 square feet, but you have views of the mountains. You're basically on the water, shared beach community. And so biggest delay on it was it's going to take us about 1 more year than we thought, just because we didn't want to put that many units on. But should end up being kind of a $13 million investment with about a $26 million sell-off.
What kind of loan structure did you have on that?
So there's basically ended up using it because they're mid-construction. Nobody really wanted to touch it. And so luckily we had those relationships built where we had a group called Seattle Funding Group came in, funded us to do the construction, get it built now. And then now we're moving to the back where it'll just be 20 individual loans. Mm-hmm. And then one of our ideas like, well, why do we do that? Maybe what we do, since it's paid off now, is we build 6 of them, sell those retail, and then we keep 14 and sell them on an owner contract. So that one's kind of been the most fun because it's just a beautiful setting, and it ended up like working. And I think what's been fun to watch is the kind of, as we've transformed that area, just kind of what it did for everything around it.
How did you find that deal? Just walking by it?
Yep.
Is Priest Lake a market that's kind of mountain towny, small sub-trade market?
Too small, yeah. If you're going up there, you're not going in. So Sandpoint, Coeur d'Alene, so not that.
So the contractor
the risk there was, hey, will people come up and buy it? But Idaho owns their land and then leases it, a lot of it, especially on the lake. And they were just selling a 80-foot of waterfront at auction. And then you got to buy the house from whoever was the tenant of it. And they just sold one of those lots for 1.5. And we're selling finished 3-bed, 2-bath with a boat slip for $1 million. Wow! So the timing ended up just being one of these things that worked really well. So but it's fun to watch those kind of buildings transform. So it's a little bit of scale with a flip.
And then that's a new contractor relationship up in this small community, or did you bring
No, so kind of leverage my contracts here to force him to come up and build those. And so it worked out.
because you wouldn't take the chance on the local guy.
No, and you can't use local. And so where we found our advantage was we just brought Spokane crews up there.
Yeah.
They lived in the finished unit basically, and then we were able to dial it in. So I think that one was one of the more fun recent ones. So
Did you raise capital on that or just use all your money?
So no, we ended up raising capital. So we ended up raising 2.5 million. So ended up borrowing the difference, and then now everybody will be paid back and kind of just go play with house money for the next one. So
Yeah, because I think you've raised some of the most money of anyone we've talked to. Like, how are you doing it?
I actually don't know. Somebody asked me that. They said, do you have a structure? And I was like, no, I just kind of find a project. And then I meet with a lot of people. So the people I brought in, was having beers with. And then they're like, well, we want something a little different. Because I'm like, I don't believe in multifamily housing right now we should be constructing it at all costs. Like, I think there's opportunities. Well, let's go find things you can't buy again. Like, you can't just go put a resort on this lake. It's near impossible. And so so we're sitting around a beer, and then I get the deal under contract. I'm like, hey, Greg, any interested? Oh, yeah, that sounds like right up my alley. I could see having one of those. And so just each deal, I kind of have these buckets for you're my multifamily group, you're my unique asset group, you're this group. And so it's worked really well. And then I just have a first come, first serve. You get one text or call from me. I'll meet with you once. And then if you say no, I go to the next one. And so we raised that money in about 6 days. And so got that one going. And so a little bit more unique, but it was one of the just kind of fun transformation. And in a market where I think it had a lot of risk and finally saw it pay off. And that's recent. We're just closing on those units.
Are you putting together an OM for that? Just talking to people?
PP, no. So it depends on. So we bring them in as members on that. So the bigger apartments, basically anything over 10 million, you have a PP. You have the full suite. Yeah. If it's under, usually I let the biggest investors, the manager. I'm a developer in the deal, and we all kind of come on with a member, active involvement member group essentially. So. Then when we go do the next loan, we will have a PPM and an OM. So there's this risk group where I want you to know the risk, tell you it's, hey, this is where we pay it off with all of it, or it goes sideways. So it's worked out pretty good so far.
So is your day-to-day, you're just trying to meet as many new people as possible and keep building those relationships, or those existing relationships that you're just keeping up with?
It's a little bit of both, yeah. So that's where social media has been a big play. It helps leverage just seeing some of it. So I'll put a post, hey, we just broke ground on 72 unit. Mostly it was for my current investors in the 72 unit, just kind of highlighting what they did. But then I'll get 3 to 5 calls of, hey, you're back going on this stuff. We'd be interested in them.
Is that your Friday update? Just a quick Instagram post?
Oh, no. So fortunately, my wife does all the social media, so it's super easy. So she posts all those, and then my Friday is actually me doing it. So I've learned you don't type anymore. So there's a feature on Gmail where you can just dictate everything. So it's actually super, super easy. But yeah, so I need a better system. Like when I hear you talk to Bridger or those ones of building, I don't want to build a funnel. I don't need that, but I want to build a better group. And then it just a better vehicle to do it. I think that's just trying to get a better system to it so that I can track it better. Right now it's just in my head. And I'm like, I remember talking to Greg. He had about $1 million. This seems like a project. He will need a minimum of this return. He would love to place it there. And that's kind of how I track it. So.
Wow.
So then usually have
junkie.
Yeah. Well,
Jordan
probably an ultimate deal junkie. I think that's why I like your show so much, because it'd be like that. The other one, that covered land play came because somebody called me and said, hey, I have about $500,000. Need to put it in something. I'm like, we're not going to get any return for $500,000. And I was like, well, here's an option. You could take all the cash flow. You bring the 500. I'll get the loan. You take all the cash flow for the next 4 years from this, and then if we go develop it, your 500's worth $1 million. So it's those kind of things. And so then I'll put the offer in. They say it's good, and then I'll send a text. Hey, Mark, you ready to go? Yeah, still sounds good. And then we do all the DD. That made it sound easy. Then we go do the hard part, the DD and the vetting. So it's a very surface level, and then I get the commitments really from there.
Yeah.
And then everybody kind of has final say before I release it.
So you have kind of a soft commit going in.
Soft commit, yes. Yeah. So I know going in how much money I have floating in my world to go negotiate it.
So when you communicate first come, first serve, is it very clear to everybody you're talking to, or is that just in your own head too?
No. So because how I operate is I'm not going to wait around for you to put money in to do a deal. I will get the money for the deal. It's just there's people I love working with, so they get Inner Circle basically gets the text first. I give that 2 days. You have 2 days to respond. Soft commitment, right? I don't need money, just soft commitment. That's a deal I would be interested in. If I don't get one, then I spend no more than 3 days to try to line up the rest. If I don't get it then we say no to the deal. So that's how quick I have to move because I have one coming right behind it. And as you're looking, so then how it works really well is, like I said, you're sitting down and it's like nobody wants multifamily, office, or retail right now. Okay, I still want a deal. So what else do you create? Well, for sale lakefront to the high 1% earners in our country in a unique destination location. That fits. Got good plan B, good plan C. So then I send that out. Hey, I got under contract. Here's where we're sitting at, and then go from there. So it's just usually how I set up my PSAs.
So do you have advice? Because Dane is our fundraiser, so his full-time job is fundraising, but he doesn't have quite the network yet because he's only 26. How does he go about like building out what you've built out?
I think they have to know you're good at what you do. I think what you could do is just focus on the projects you have done at a high level.
Yeah.
And go and lead with the project first.
Yeah.
And then then eventually it'll be you coming ahead of it, and then they'll be wanting to just hear from you to see what the project is.
Yeah.
So I think what I would do if I was you is just build out that project base. Like on mine, it's super easy, right?
Yeah.
You want to be an investor with me, you'll come to Spokane. I'm going to take you down to Brick West, sit in a $5 million remodeled building that looks beautiful that I did with a beer I created from nothing, staring at 4 buildings I own across from it. Like subconsciously I already have you invested.
You did that to Mark, by the way.
Exactly. That's why I'm on your podcast.
Yeah.
He's here, guys.
Yeah.
But so you just kind of set it up, and you're not selling somebody. That's the cool part now is I'm not selling anybody on it. Like I could do a deal or not do a deal. My life stays the same. And so for me, it's like, hey, this is a good position. And I think as the crypto gets more volatile, as stocks don't return as much, I think that's what hurt me the most was like I didn't have a better option. So there's nothing to sell you.
Yeah.
There's no way if a T-bill is paying you 5, I'm going to have you put the risk in this building.
Yeah. Well, and that's
Just
what, I mean, you sound exactly like how you've raised money in the past and Gabe's raised money in the past. And the only times I've been successful is when, like, as somebody who my full-time job is to think about deals, and I just happen to be the guy that fundraises in our group, I wouldn't say that I am a fundraiser. I would say that we're all just addicted to doing deals. And like, I would much rather be looking at development deals than I would be but in order to do those, somebody has to raise the money. But to that point, when I'm raising money on a deal and I don't genuinely believe like this is what we should be doing right now, it's like, well, how am I even going to, I don't want to raise money on the deal. And so that's why, part of why we're so limited on projects right now, because we've been so strictly multifamily. Yeah. And so it's like the deals we are doing are home runs. Like we're only doing home runs right now. And it's like, we're not even doing the give them the cash flow. Like we're doing 70-30 GP split and the return's still there on those deals. Yeah. And then like, on another project, it was 50-50 in the and he, brought all the capital and the return was still there. Yeah. And so it was like, okay, yeah, I don't have to sell you on this. You'd be dumb to not do it. Yeah. Like, and if you understand that, then like, this is going to be easy for both of us. Like, I'm just giving you the opportunity to. And so I guess to that point, like you're not a salesman really. You're just a guy who knows the truth. And then you're sharing what you already know with somebody else. And it's like, yeah, I found the good deal. Yeah. Do you want to be a part of it? Yeah. And you got to create some exclusivity to what you're offering. Yeah. Right. And I think that's the big one in a market where I have a pretty good pulse on it. Yeah. Is that you got to have that. And then you got to believe in the project to your point. I think it comes across very quickly. Like I probably have you half invested in my 520 unit. I don't even have the land yet. I do have the land, but it's right. But I think the more you can come across doing that, then it's not fundraising. But you have to do a really good job of understanding and hearing what they're saying. Of look, I don't want the risk of multifamily. Yeah. Then you have to decide as a team: do I go create a different vehicle? Yeah. So because you're going to keep running. If you keep sending the same vehicle, they know every time you send it over, it's the same ground up build. Yeah. And then they're going to start in a tight market. They're going to compare your 70-30. Well, what if you didn't do 70-30? What if you did 90-10 for 2 years? Yeah. And had a better waterfall? Because you're already hitting the numbers anyway. You're just going to make it on the promote on the back. Yeah, yeah. And so that's the difference. You got to. It's just it's re-envisioning, because if you came to me with 70-30, I'd laugh at you. Yeah. Yeah. Even if you hit my return, because I'm like, what happens if you don't? Yeah. Mm-hmm. And so versus like, okay, adapt to the market. If we want to only keep doing this, we're really good. Obviously, sounds like you're really good at it. Go 90-10. Yeah. Give them such a massive win in this bad market that you'll double up in the good market. And that's kind of what we did. So there's something I take 0, because I know, like the perfect example, so this is the finished story to that, is then how I negotiate the deals. I got my developer fee, but then I'm the broker selling all 30 million of those at 5% commission.
So
good deal.
did I win or not, right? And that's the piece. But they would have had to hire a broker anyway, right, as a team. But then I add another $1.5 million to the return because I was the broker. And I think the downside is we all look at this the same thing of like, oh, we build 24, we'll manage it really good. Well, maybe you do. But what else can you do? What if you bought 24 to build 24 more on the back end? So you gave them 90-10 on the existing and 70-30 on the addition.
Yeah.
And I think that's what I'm finding is you just got to have some flexibility to that structure. Yeah. And then it's internally, how do you manage it?
That's so interesting because we felt like our first few rounds, we'd spend, like, call it a 6-month due diligence time frame. We spend like 5 months wrestling with what we're going to offer. Like we like figure out what we want, talk to a few investors. It kind of shifts. The deal changes a little bit. We shift our structure again. We're like adjusting as we go.
Yeah.
And then we're like, okay, no more. We're going to do one vanilla offer forever. Don't spend any time on like brainstorming a no-brainer structure. But now we're feeling like you should lean back in and get creative.
Yeah, and what I would say is don't waffle once you do it. You don't let the market tell you 90-10.
Yeah.
This deal, we see a better opportunity on phase 2 of this or this partnership with a specific investor that we're going to give up 20 to make 50 here. That's the difference. If you came to me and you're like 70-30, I'm like, no. What about 80-20? Or what about 90-10? You're like, what about 80-20? Well, I know I have you then. I'm going to say, what about 15-85? Like versus, hey, this is our deal.
Yeah.
But you on your end start looking at it. But if I know you're the 70-30 guys, I'm going to ask a bunch of other people before I take that on because there's nothing unique you're creating. And maybe I'm saying that bluntly, right? And maybe there is.
Good point.
Maybe there is. But like you're still building an apartment building.
Yeah.
You're not
No,
building,
my feelings aren't
You're not
hurt.
building the Sphere in Vegas, as you shouldn't. But like there's nothing so unique to what you do that I couldn't find it down the road.
Yeah.
And that's the difference. So then how do you compete? Communication. You can compete on communication. I would show your communication styles. This is what you can expect being an investor with me. And then what I did, so I took this advice that I gave my wife. She was a photographer and started not liking it. She did wedding photography. She was like the pressure of each event. And back then you had it on a digital card. If you lost some like wedding photos. So she did like 20 events the first summer. She's like, I hate it. I said, okay, cut the number of events in half and double your price. Did it again. I hate it. I'm like, all right, cut the events in half and double your price. By the end, she was doing 5 events, making more than she was when she was doing 20. And you'll find that with investors in deals. Just wasn't year one.
That's gold right there.
I think too often we try to take so much off the front end. And you're like, wait, that's not the win. Maybe the win is just a management portfolio so that we can grow. And then when they sell in 5 years, we're the buyer in 5 years and we're capitalized.
And a win for us over the years has been that investor that we gave the house to, his friend is now with us.
Exactly.
It just goes on and on.
It's drop the rock in the pond, right? And the ripples go from there. The issue is people try to hold the rock too much and then don't share
Never
it.
do anything.
Yeah.
All right, let's dive into this bad development deal.
Oh,
Okay, actually, this is a good one, and it could turn good. So I'm going to caveat because I don't want to cry on the show. So, but it might make me cry because of how bad it's been.
I'll grab the Kleenex.
But it's turning a little better. So again, I'm a curious developer. I'm actually probably an entrepreneurial developer, right? I need to win. I need to always be pushing. And so I built this 23 unit complete historic rehab downtown, toughest one I've done. Got it done, sold it, and it was great. And I'm like, the issue was we didn't have scale. We got to get bigger. So I found the 7-story right downtown, 115,000 square foot. I'd helped an investor buy it. Well, when everything started turning, he needed his funds, and I just probably the worst decision I ever made. I should have just had the hard conversation. I just felt guilty helping him buy it, and now he's sitting in a spot where he might lose it. And so I said, you know what? I'll buy it. So, but I didn't just buy it. I bought it as if he made money. So
And
what
he
he paid
didn't.
plus, but I should have offered like $3 million. If Scott's listening, but bless his heart, I've had this conversation with him. But the plan was fine. So it sits in an opportunity zone. I had found a viable opportunity zone group that was going to come in. So the purchase price was $12.25 million. We were going to spend $18 million getting it there, so we'll be in $30 million. But we had to control the property first. So I had to own it. And so the idea was we'll bring 7, close on it, get all the permits going. So that way we're running with this thing. And then their goal is to go raise $12 million. We would leave 2 in. They would cash out the rest of it, $12 million. We're off singing. We have a brand new asset for downtown, the heart of downtown. So we get going. We close. I do my part. I wire the money. We get it done. We're off and running. And I was like, hey, let's just set up a weekly call. I just want to track it. I've never raised that much money. This was before I started doing all my raises, and because usually we funded our own. And first month, I'm like, oh, they're like, no, we're off. We're getting all the materials together. I'm like, materials, huh? Like, and they're just some phone calls. Like, you made it sound, you just raised $53 million for another one. Month 2 goes by. Yeah, I mean, we're going to set up something in Spokane. We want to bring investors through. I'm like, oh, well, makes sense. You'd want to see the product. Scheduled for month 3. Well, there's no investors there. They're brokers. I'm like, so we're now 3 months in, and you just want to bring brokers. And I said, you remember, I borrowed it like, well, it was Axos Bank, so it wasn't a terrible rate, but it was still like 9.5. And they come back, it's month 4. They send me $25,000. I'm like, what are we supposed to do with that? Like, that my design fee is $700. And so I'm like, okay, well, I guess you're doing something. Month 5, we get $100,000 more. And I'm like, oh, shit. This is not going, like, this is a 1-year loan with Axos that I thought we only needed for 6 months. Month 7, I mean, you can play the story out. They end up only raising $900,000 in 2 years. And then they're going under. And so now it's me and 2 investors who expected to be in this thing as a developer. He was going to keep 10% for the $2 million, be refunded. Are sitting there like, what do you do? I just kicked every tenant out and gutted the building.
And you're $11 million short.
And made the building worth less. So I paid $12.25, took every tenant out that made it worth $12.25. And so we're riding on 1 floor of income, which is about $18,000. Mortgage is $90,000. And I'm like, man, it's not hard math. This at a pace is doing this. And I was like, but the project is still really good. I just got to explore better ways to do this. And so end up kind of sitting down. He ends up bringing more so we can have it demoed. Because I said the downside is I can't go raise that much money if people still are concerned what's behind these walls. So we spent about $1 million doing that. First, I had to go to a different contractor because my lender was like, hey, your new guy doesn't have enough experience to do this. Hire him. He, over the course of 4 months, demos 1 floor. And I'm just sitting there at this point. And at the same time, right, this is that saga where I could cry because I was crying on all my other ones. I have 12 of these going on. So it's not even like I can just focus on this one. And so basically, all of a sudden, then I get something in the mail. I haven't heard from this Opportunity Zone Fund for almost 8 months, 9 months. And they're like, hey, we're going under, but we want our money back. Oh, and I was like,
What?
calm down. We got this. We got this. I'm like, and so anyways, end up fighting them on that front of it. Get a loan funded. Like, it's an Urban Standard out of New York. Awesome group. If you ever need a group, they're awesome. We have enough to get it going. I get this new contractor on board. He's like, I'll roll my fees in. So I'm like, we are skating into this thing to even get it done. $25 million, we're in through due diligence. And again, these due diligences are deep. They're like, what's happening, all this? Well, this is what comes out in the next month when I'm supposed to close and they're doing their final DD. Front page article that Jordan Tampien faces foreclosure, stabbing in Riverfront Park, and vacancy rates at a all-time high in Spokane County. So they take my loan from $25 million to $21. And so then I have a $4 million delta, and I'm like, how do I even raise for this thing? And so we're now, fast forward, so that's January 2023 we close. And I think I'll fund the final construction loan March of 2026.
Oh.
And so I think I lost 2.6 in carry costs.
And you're going to pull it off.
So we're going to pull it off. So we found another lender and then a pref equity group that's coming in. Luckily, rents went up. We got that sales tax incentive that's kicking in. It'll still be a really hard project, but that's the one where you're just like, 90,000? And like, this isn't even going to anything. We're like behind. Like, this isn't going anywhere. And it was the first one we had. Is this like finally the good money after bad? And fortunately, awesome investor I have with me is like, nope, we're going to get this. Let's stick it out. And so it'll be one of those cool ones. There was this one downtown Portland by the McMinimans there where we had the shut down the street. It's like, I think we're going to be able to do something kind of similar in front with patios. And so it'll turn out cool. But oh my God, I wanted to burn the building down several times. And that's the one where like, you're not paying energy bills. So then every tenant's getting notice to shut off every other month. I'm dealing with them. And so I got to know every city person, every power person, every tenant. And it just turned into this like saga that if I could have handed any one of them back, yeah, that'd be the one. That would be the one.
What's going to be the outcome? 100 and something units?
96 units with the first floor retail. So,
okay. Fortunately,
like I said, it'll be tight. I think it's like kind of a break even in this market, but if rates come down, it could be.
When you talk about having that deal and then times 12, how do you manage this in your mind of where the money's coming from, where the money's going? You're writing that $90,000 check. Are you out? You're trying to generate income through your brokerage, your management company. You're doing a lot of the same things I'm doing, but then you're like, how do you organize that information in your brain to understand what needs to actually be done to pull it off?
Yeah, so unfortunately, my brain does that already. So what I have a tough time is delegating that, is showing that to everyone else. And so typically why it fell on me was because I was the one who knew it, right? I'm on calls with equity firms every morning at 6 a.m. So like my vocabulary on how to explain these and how to do the deals, I mean, that's what I've gained over this time. Like I can tell you literally why we switched from metal to wood studs and how the weight capacity is not going to hurt our engineering. It's actually going to help our acoustic value. Like it forced me into learning all that. And the hard part, back to everybody thinks the fire's the fire. It's not. It never was. It's just the loudest, right? Is then buckle down to what do we have? How are you actually going to get out of it? Well, I'm not going to get out of it by calling each of these back. I'm going to get out of it by performing on these. So I started reallocating my day to 30% of it income, 30% of it kind of addressing the good deals, and then the rest was calling. And then I did all tasks kind of after hours, like the emails, follow-up, stuff like that. So it just really was reallocating the day. And then now my goal is to get to 60% income generation, 20% monitoring the deals, 30% finish cleanup, and just really reapportioning because the reality is you're not going to get out of it just by walking a property down the line. Like you're not going to solve a $90,000 problem from that. And then the other key is you have to make sure you're not cannibalizing something for something else.
Yeah.
Right. So then that's the rumors. Jordan's robbing Peter to pay Paul. And I said, I wish I could.
Yeah.
I said to make this easier, but no, you're sitting here. This sits here. But the Brick West one was like, I put so much stress on our operating companies. And luckily had management and some of the ones there, but they all took a hit because they aren't designed to bridge 90 a month.
Yeah.
Never were, never should be. And so I think what I'm trying to get better at is how do you allocate that, but it's unfortunately how my mind just works. Like we'll have a conversation, you're like, man, I'd just love to get in Washington. All it really needs a 12% return. It'll somehow track my mind, and then I'll be working on a project. I'm like, man, we're just like 300 short. I just need somebody that wants to make like 15%. Oh, yeah, I remember Gabe said, hey, Gabe, will you be interested in this? And like, so I need to build a system for that. And I think some of the problem with it was nobody could step into my role.
Yeah.
That's what the worst part. And the bank didn't want it because I'm one of 3 developers who build that building.
Yeah. You're running an institutional operation without the institutional level systems.
Yes.
So you got to get that out of your head and build the team or build the structure around it so that it can operate outside of your head.
Exactly. And the hard part was the longer you wait to do that, I'd already built an even bigger system with just my head. Right? So normally you would have stopped at that point and be like, all right, let's put this in a system. Let's have each person go do their part. The issue was I was solving them all. So I'm still the only one building this, right? Everybody's just cleaning up if I miss something. And then I'm at the top, burned out, tired, frustrated. Why isn't anybody helping me? And they're like, where do we help?
What do we do?
Where do we even
Don't know
help
what
you?
to do.
Where do we even help you? And then I'm like, actually, don't go do that meeting because if you say this and all of a sudden you complain about the stabbing in the park and what you think I'm fixing, that's going to hurt my argument because I've been talking to him about how we're improving that. And so it just kind of was one of those of like, all right, this is just Sophie's choice, man. I gotta get this to the line. And then what we're already proactively doing is like, who's going to fill these voids? And some of it's going to be third party, so it's not employee based. I'll lean a little bit more on our brokers for the loans than I had before, and I found a broker that actually helps me put that stuff together. Our management, we brought on a new partner there who's helping us define that. But the issue was like it'd be like a rent roll, and then my brother would send me over a rent roll. I said, Joel, you try getting a loan with that rent roll.
Yeah.
Like, what's vacant unrented? Do you think my lender knows what vacant unrented is? Then I'd get frustrated, and I'm like, never mind, I'll just do it. And that was probably the worst decision. I was just saying, I'll just do it.
I'll do it.
Have you had luck with the pref equity groups?
Yeah. They like my model, right? Pref needs scale. That's the reason. Is like you're going to keep saying, what's an average? I should have spun this question back on you. What's kind of the building type that you guys do?
3-story walk-up.
How many units?
60 to 100.
Okay. So kind of a similar one. Yeah, right. So, but a lot of people will try to do like the 20. They don't want 24 units.
Yeah.
They want you to build 3 100-unit buildings. And then they want to invest in you as the operator. Like for me, I think you guys mentioned on one of them, you're looking at like a JV structure or something like that. Go get the bigger person. I mean, it's very similar to what that would look like, except for on this one, I can exit them at a known number. And so it seems to work pretty well with our model.
How'd you find those pref equity groups? Because we've talked to a lot of them, and then they don't come through on placing that capital. They like to. It's a lot of debt brokers who like to say they also.
Oh no, yeah, don't do it that way. You got to go direct to them. I mean,
Family office.
Craziest thing is you literally just Google direct lender pref equity.
Yeah.
And the top 5 pop up. And so what I did, I flew out to New York, met with 3 of them. There's one called Mabdon Capital. It's awesome. They were just too small. So you need a $10 million check. Mm-hmm. And so there's a group that we're closing with now, Armada Capital, who's awesome. And they'll do that tweener check. But the idea is ultimately you get up there. The downside is you're just letting the wolf in the hen house too.
Yeah.
So it's just careful what you wish for. Is it worth the project? Like, is that project worth it?
Yeah. So
To
what's your
build such
capital
a
structure on that?
So on that one specifically will be, and we're redeeming investors. So for me, it was the better dollar they wanted redeemed at par, and so I was like, this allows me to accomplish it. But I think when we're done, we should be worth 2x. So
Okay.
So they'll come in. So I have senior debt with Arixa. Pref came in behind that and really reinforced the redemption and the interest reserve, and then our equity, and then the land was contributed.
Gotcha.
So probably similar to what you guys are trying to structure that way.
Yeah, pretty
the pref
close.
just solves you having to go out and talk to 500 people. The issue is you're going to pay 20% a year on it.
Yep. Pay for it.
But if you're looking at 2.5 multiples,
Yeah.
then it's worth it. If you're getting the actual multiples we're getting, like if we sold today, it's tough, and then they have a clock on it.
Yeah. So what's the timeline on that?
2 years.
2 years for pref, and they're at 20% paid or accrued, like 10%.
So it's 10
accrued,
current, 10 current, and then 1.4 multiple on exit.
Yeah.
Which is expensive, but again, we hit 1.4 multiples all the time. Like that's why it's crazy in this market. But before, I mean, we were hitting 3.2 on most of our projects. And again, we sell, so ours you can't really use that example for a long-term hold. But like we were turning that money pretty quick. So I like it for that reason. It allows for deal flow. And then what happens is now we have 400 units of management. It's probably another $20,000 a month in revenue. So we have enough vertical integrations that allow us to benefit just from volume.
So you're getting to 65 on your loan, 85 on pref, and then 15 is coming from contribution in your own equity. Oh my goodness. Yeah.
So you could do a lot of deals when you do that.
Yeah.
Yeah.
Because I mean, the land contribution itself can get you there on most things.
Yeah. And then what more they're at now is they just want to see you have skin in the game until, which you guys are, you just show you're an operator. Right. So then you just show that track record. So then I like to meet with them personally. Like, look, here's what I'm trying to build. You have the cash. You want to deploy the cash. I have a model.
It works.
It works.
Yeah.
So then but then what I kept hearing was like, it's too small. It's too small. It's too
Yeah.
small. So
That just forced you to get bigger because that was the easiest way to.
yeah. So like when I look at that other land
was
deal,
to get bigger.
yeah, exactly. So then when I look at that land deal, you're going to have 500 units. Simple math. The land's worth $12 million. So that's 12 in the deal. Let's back up one step. I'm trying to be all in at a cost of $100 million, right? 12 million of that's from the land, so 12%. The contractor rolled fees about $3 million, so there's 3%, so we're at 15. Then my dev fee, if I roll that in, then I'll probably still want it if we borrow, we would do it that way. But if we didn't, if we borrow, then we'll likely bring 5 to 7% in cash. And then pref, then a senior.
Will they count your developer fee and GC fee as part of the? They will.
And your GC can float that whole thing.
Yeah, because he's still getting paid. He self-performs excavation and concrete.
That's the new guy that you're
we
working
picked 2 of them, and he gets a portfolio project. And then honestly, he owns it's more than 3%. It's probably 7-8% of probably an estimated value on those would be $250 a door. So $150 million. His numbers pay out pretty well.
Yeah.
And then the other thing is I think you were saying it, but like get everybody on your long-term page then. If everybody's on that same long-term page, it wins. If one person thinks they're going to get cashed out in a year, it blows the whole thing up.
So how are you ever working with your architect and your engineer on the same thing where you're bringing in third party?
Yeah, so then
and
that
saying,
project,
hey,
they'll all roll in to that one. Yeah.
Yeah.
And so what I'll do is think you put yourself in their shoes. They can't roll into everyone.
Yeah.
So then what I do is I give them 5 to 7 retail. Make your money, do what you need to do, survive, build a cabin, do whatever you need to do. And then, but I want 1 a year.
Where you roll into mine. Yeah. And so that's how they float there. And these are most of these smaller firms. It's a guy who's really, really good, but it's his. Yeah.
In the architect, we kind of float around with, I have a couple of really good ones. So it just kind of depends on who's hungry at that time. Engineers, engineers are the hardest one because it's only about $200,000 unless it's a full entitlement play. But the big ones are the contractor really. And then what we're working now is even going below the contractor to MEPs. all right, play this out. Do you want, 500 units is going to be a 7-year project, 5 to 7 year project. Do you want 7 years worth of work?
Yeah.
And you're going to give up 5%. The big one that you can get caught on, so make sure they don't do this. You don't want them to bump their number 5%.
Yeah.
Donate 5.
Yeah.
So then we hold them to our per build number before we ever offer equity.
Yeah.
And then I take them out to bid, and I'll match it against something. And if they're high, then I'm like, look, you can't be my guy. You knew the parameters and you lied. Like I'm switching, and we control the market, right? So then we're going to switch to this guy.
Let's talk about your 3-story walk-up ones
Yeah.
you liked and didn't like.
Love them. Yeah. So the best part, I will say, I completed every single one I started. They're all done, leased, and good. Where I got in trouble was on the financing. My cap stack was so levered in the market where you have to take it out. And so I think the supply chain issue of COVID, that's where I heard actually most people got hit because you could be sitting on a finished building and waiting 8 months to move somebody in.
Yeah.
And so from a development standpoint, I think it was a lot around supply chains that kept me up at night. But then really where I got hit was on the debt side. But what we're building now, I think, is sustainable no matter what the market does. So we're looking for heavily incentivized project sites. So it has to have property tax. So Washington has really expensive property tax, 9 to 10% of your OPEX. So it has to have property tax and then 2 to 3 other incentives that we can put in there. Biggest one being the sales tax incentive. That saves us on our build cost. It's 9% on the total project cost. So
Then you have excise tax when you sell it.
when you sell it, 3%. Oh, anything over 3 million is 3%. So yeah. And so what you're doing is you have to bake all those into that cost. And so this one, the structure was great. Got the different debt with the RICSA. We brought the funds for that one, so there's no even pref play in it. And then it got the sales tax incentive. So we're down at like $170 a door all into it because the land was contributed. And so really we only raised, Jesus, is it that low? I think we only raised $1 million. $1.1 million. Guy put in the land, raised $1.1 million. Builder put in equity. We rolled our fee. And then we had all those sales tax. So it's the equivalent of as if we did $5 million. But then everybody's ownership, I mean, you're splitting up 80% in $1 million. I mean, everybody's percentage is like a massive chunk of it.
Yeah.
And then we don't do capital call requirements for certain parts. And so it's really try to protect the LP in it. But I think building them now for us it's all about the cap stack.
Yeah.
And then little things like now we're getting feedback. We should put pantries in our units. Some of the units are a little too small. And so we're redesigning a new concept to come out for the next wave. So we built about 800 of this one, and then our goal is to build 1,000 of the next one.
What's been your biggest win on a deal?
Oh man, there was stretches. I mean, we were cashing most of them. So how most of them work is I'm building them for 180, 190 a door, and I was selling them for 250. So every deal was 60,000 in profit plus return of capital. And so I think 72 unit was 5 million. 4 or 5 million in a year because we were building them so fast. And so then I don't think it was an issue. I think it was right. But then we would take that instead of hitting the tax burden, then we'd roll it into the next project.
Yeah. What kind of groups are buying those projects? On that?
They're kind of they're big syndicators. So they're ones that are raising a fund and then they're coming to and so have you ever heard of Brinkman companies?
Yeah, I wrote Kevin. I'm selling him a deal right now.
Yeah. So he bought my first. So I got to know Kevin through that. Actually, he had a podcast.
Great
I asked
guy.
him why he wasn't keeping it going. He's like, I hated that thing. But like he walked the one with me and I go, why? Because they're known for their construction, right? And they split off.
Yeah.
But he goes, Jordan, I'd rather just know what I have. He's like, you took on all the risk, and like, there's no reason for us to take that risk because our money is different. Like, we just want a steady return. And so there's like 4 or 5 groups. So one thing I'd start doing now if I was you is build those relationships because they want the relationship too. So there's another buddy, his name's Brett Silverstein, was with
Brett's
Brinkman.
great, yeah.
But like, go to those guys now before you even start something. So I went to him with this idea because we're breaking ground on 160 of this style unit, but I have another 300 of them. So I was like, hey, give yourself 2 years, but if I put all 500 in a bundle, would you guys come in the market? Well, that's enough for a big player to come in the market. And so I go to them before I even design. They're the ones that told me I need a clubhouse in every one of them. I need a better amenity package in all of them. And so I just go way down the stream to who was going to buy this when I'm done and say, what are you guys even seeing and buying now? They just want access to the opportunity. So they're going to say, hey, look, our investors don't want to touch it if it has all 1 bedrooms or whatever their parameters are, right? And then you can then go all the way back to, okay, these guys' box is 100 to 200 units. Why am I building 50?
Yeah.
So then we scrap the 50 and we go find 100 because I know if there's one, that's how the market moves at that level.
Yeah. Those deals, from that perspective, I've not been able to figure out like why they buy that finished product at the highest price and hold on to it.
That has kept you up so many times. He has brought this question forward.
They're playing a different game.
It's just different cost of money, different. Like I understand that, but I'm like, what returns are they targeting on these?
Here's a better one. So I don't know how Oregon did, but Boise's my best example of it. When we entered the Boise market, we were buying units for $260 a door. At the peak, Class A, but at the peak, they were trading for $425.
Yeah.
So what you're not counting in, it's like, well, the stock market went down today. Historically, over time, though, it's up X%. So what they're saying is we believe you'll never be able to build that unit again.
Yes.
Well, tell them the build to rent model.
Yeah.
You weren't in the room before we got in here, but it was the perfect example of it.
Yeah, it's a great example, right? So the build for rent model, right? Where so instead of building a house and selling it, you have large groups raising these funds who are going to then build and rent. So it's an entire subdivision of rentals. Boise is a good example. They just built one. The cost to build is about $550 when you put in the land and all those pieces. It's worth probably, if you sold it that day, probably $650, $700. So there is a margin there, but it rents for $2,600.
Yeah. See, those I don't compute.
But that same townhome used to sell for $350.
Yeah.
And so what they're doing is hedging against that. And if you're all cash, you're still probably hitting 3%.
Yeah, so they're just fine with that.
Yeah, and
Because your payout's
at the end.
Yeah. And the difference, and so I'm starting to switch my own mindset after working with them so much, is I had a flipper mentality. And I think that works, but you got to get out of the flipper mentality because then you're missing the win. And that's why a lot of flipper mentality is 30-70. Because we have to make our money up front or we're not going to make the money. Well, what if none of the money was made in that deal? What if that deal got you a portfolio size that got you 500 units? And I think once you can switch your mentality, that's when you'll see the deals.
Yeah, because they're just playing a different game.
Yeah.
That's what Bridger taught us. Yeah. It's like,
Well, they're playing a better game.
game.
Break
You're
down,
paying taxes.
What do you mean when you say none of the money was made in that deal? Like what?
I'm saying I've done deals for free. Collected nothing, but it brought
So
on a portfolio that now I'm developing 400 units for them at a retail rate plus the management contracts for 500 units. And where we got burned the most, well, it wasn't burned. It was our model. We were merchant builders, what they call you. Worked great, made a lot of money. Oh, I paid a lot of tax. And now I'm looking at these guys and they're like, probably like, you idiot. Keep a couple of those. Just get better debt. You would have been better off holding one at 50% leverage than the 15 I built and sold. And so it's just as we're going through. So everything I'm looking at now is like, okay, I told 5 to 7, so we're gonna honor that with these. But then I'm like, okay, year 5, can we just buy them?
Yeah, that's what we're looking
And
at.
then can we build up a portfolio and then get it to 1,000 doors? Then I'm going to go to a Blacks. I'm going to go to a Monster that has long-term money. Because what you'll find is when you go to sell your 60 units, it's going to be a Jordan coming in saying, "Oh man, you know that person isn't even in there, so your NOI is probably inflated by 15%. So we can only give you a 6.5 cap on that. So, but we can do it tomorrow if you want to." Blackstone will look at it and be like, all right, so they're building out Salem. It's going to come down further south to this area. This will connect up in a 7-year period. And at that point, what these guys are missing is those unit values go to 300. Or they're putting in an aquatic center a block from where you're at. You don't even know it's coming. You're going to sell to them, and then all of a sudden, there it is.
Boom.
And so the land they bought from me, and this is where I learned the lesson, was in this sweet spot of West Ada School District, best school district. And then they announced a Costco coming in a block. Like I knew there was stuff coming. And it's like, but even today, like you wouldn't see it today. But they're not even looking at today.
Yeah.
But their capital is set up that way. Like the whole thing of like, if you raise that capital with that strategy,
Yes.
you can play a different game.
Yeah, because you're still going to cash flow. They paid cash.
Do you look at a lot of the deals you've built and sold and look back and be like, man, I wish I would have figured out how to hold these things?
I don't actually. So for me, I in order to build 520 units, I had to do all that.
Yeah.
If I would have held the one, I wouldn't even be here.
Yeah.
So for me, it's a different game. Are you trying to preserve wealth and create cash flow? Then yeah, perfect model. Are you trying to change communities? It's a terrible model because you need cash. And it's like you can't even build a track record building one of them.
Yeah.
Like like if you're doing 60 units and all of a sudden you want to pop a 520, you're never going to raise the money.
Yeah.
And I think the difference is, so then for mine, it's like, well, I knew I wanted to do 520. So I need, in that mix, I need 100 unit buildings, I need townhomes, and I need for sale rentals. So what do I have? A brokerage, a management company, and a for sale model where I've done that several times. So then when you go to raise capital, it's like, look, just like these other 16 projects, We're going to drop that here. But we learn from those 16, and we're actually going to make this more efficient. And then I have a broker team that's going to go sell the 50s. Actually, you know what? We're going to pre-sell and take deposits that'll help fund this one. And then over here, we did a senior living facility, and our management fees were actually way better that we can give across all of these. And so that's where we're going to do this one, right? And I think it gives you that kind of credibility to get there.
So did you know on the front end you wanted to get to that point, or had you been doing these deals and then?
Well, my goal is 1,000 doors, and so that's why we kept pushing. And you can't get to 1,000 doors buying a single family. So So when I got there, I figured it was 100 unit buildings, a net cash flow of 300 a door. I'm like, that's enough for me to go do what God wants me to do in this world. And I think as we were moving towards that, like I said, there's so much capital needed to get there. It was about 6 months from it working exactly like it was supposed to, but it didn't. And now we're here, and who knows what this story is supposed to tell after that. So, but I think it's just don't get stuck, right? I think the operators that do well are going to see what's coming and adjust well before then.
Mm-hmm. So you're kind of a lone wolf in this too. Like, you're leading the charge. You don't really have partners constructing this vision with you. Do you like doing it that way, or?
I mean, you get your way. I think I've gotten better about seeking advice. So what I had to do back to that point is like the group I brought with me was managing single family homes. And as we've elevated each level, you have to elevate. Some part of you has to elevate. And like I said, we just made a pitch for a management portfolio of about 5,000 doors. Well, if we wouldn't have managed that before, we can't even make that pitch. And that's the delta nobody sees.
Pitching to buy the 5,000?
Manage. Just so we can grow a better cash flow vehicle for what we're doing. And so when I look at it now, it's like I need to find those pieces, but that's why I'm here in person. I'm hoping to keep reaching out and find more and more people that are like, whoa, Jordan, we've tried that. And then what I'm going to say is, I know you tried that. What do you think of this? And I think it's that balance is where you're going to find some of the coolest like developments come out. I think the hardest times create the best opportunities. I do believe that now because we are so efficient right now. And if this wouldn't have happened, we never would have been.
Mm-hmm.
And like
You're
now,
not forced to be.
Yeah. And so for me, it's how do I find those people, and then how do you train yourself to listen to those people without changing your own path.
So who do you look up to then and like listen to when you're doing all this?
Hard part is I haven't looked up in a long time, so it's super hard. But like I think like I was telling you before, and I wasn't even joking because you were on here. Like you have a great podcast. You guys ask questions that provoke the thought to have it. And I think so. What we're doing is creating more meetup style stuff where you can get in there and do it. And the hard part is you go in and a lot of people are at meetups because they want to flip a home. So you got to figure out how do we create that next level meetup. And so that's the stuff I'm trying to put together now. Is like if you do a 50-unit building, I should have a room of just people doing 50-unit buildings.
Mm-hmm.
So are you running that meetup right now?
Oh, no, I don't have time. No, that's what I'm saying. That's the stuff I'm trying to get to is to get there. And then it's just I think this is the next couple of years, don't even focus on the deal. Focus on growing yourself and your business to where that deal makes so much sense that you don't even have to think about it. And that's where I'm at now. That's why when that one came by, I'm like, sweet, I know I can put 93 units. I didn't even have to see it. And I was like, that's because I spent 2 years not looking. And I'm like, now I know exactly what works for our model. And it's going to be 93. Okay, that puts me that much closer to 1,000. So
when do you think you'll get to 1,000 by?
I mean, it's just time. I can get there next year. It's just now I'm looking at our market. I don't know if our market can absorb that many. Mm-hmm. So I'll probably start looking at another market. It's going to take me a while because that's where I got burned the most. Mm-hmm. And so this is for me is how do I reach out to a new group here? Because I would love to just place capital then. You hate raising money. I can raise it. I need to place it in something that works.
Deal.
Yeah, right? And it's like, how do you combine Deal Junkies into something where you're solving problems for somebody? And I think that's the bigger one for me is making sure everybody in your circle helps you solve a problem, not drains your battery.
Yeah. Have you found it's been like lonely socially as you've been climbing this ladder of success?
It's super interesting. I think I got lucky and built all these other businesses that are super social. So like I go to the soccer games and I'm meeting fans that if you ever get to Spokane, you should come check it. It is so much fun. And so then it's a whole new vehicle. I'm at the brewery every day because I'm helping run the thing. And so I have friends just meet me down. So fortunately, I was looking forward enough to know that real estate by itself is the loneliest venture in the world.
Yeah.
Mm-hmm. And so I created all these other avenues that aren't.
Tell us about the soccer team. What does that look like to buy?
So I had 3 crazy goals in my head that don't have to make any financial sense. And one is a pro sports team. Second one, a racehorse. Third one is fund a movie, like a true production movie. And so I got a docuseries working on the Peyton one. So that's an 8-episode docuseries. So I'm kind of seeing that vision come to life there.
Working on what?
So it's a cool rehab. I mean, this building is fantastic. The story, the history. And so we are doing an 8 40-minute episode docuseries.
Is that the project you just
The Peyton one, yeah. Oh, sorry, yeah. The downtown historic rehab.
Yeah.
And the racehorse is just fun. And me and my daughter love going to Churchill Downs and down to Delmar. Anyway, so soccer team came up because I wanted our beer to be the beer there. So I meet with the group. They asked me if I want to buy. I said, no, honestly, I don't know anything about it. I love the sport. And they put the stadium right downtown. So like if it's there, it's going to be great for everything I own around it. Mm-hmm. And I said, but I'd love to put money in. So let me know when you're kind of raising capital. I'm out here trying to do my own thing. And this is when everything is going like exceptionally well. All my projects are going. I have lines to buy my projects. And so they come back and they're like, man, we're still missing like the big investor to help really get this going. I'm like, well, you good luck, man. You'll find them. And I said, just keep me in mind. I'll do something down the road. And it kind of got to the point where like, hey, we need somebody to step up that meets all these requirements to do it. And I'm like, you know what? I was hopping on my snowmobile up the lake. Again, I could have had the retired life. This is the hardest part. Hopping on there, about to take off on like this 73-mile trek through the snow with a buddy. And I just sat there. I'm like, well, one of your goals was pro sports team. This is probably the best chance you get. And so I'm like, yep, do it. And so put the money in, and it's like a real life fantasy football. It is the most fun thing. But again, you have to know what you're doing. This is a non-cash flow investment that you grow enterprise value.
Yeah.
And so I thought, okay, I have a ton of daily cash flow. I have monthly cash flow. I have that 2 to 3 year cash flow. And then this will be that payoff one day when enterprise value of the sport grows. And so it's just been kind of on that venture. Now, everything would have worked fine. It's not even an issue. It's just a significant capital injection.
How much does it cost to buy something like that?
Undisclosed amount.
Okay. do you own the stadium too then?
No, so we lease the stadium. So we just own the teams and the rights and all the pieces that go with that. And it's great. I have the best operating partners. The team is awesome. And then it did exactly what I thought for the community. It's the thing to do on a Saturday. It's awesome.
Yeah. And this is like MSL or?
So there's 2 leagues. So if you know the European League, well, like they have 5 leagues over there. But it's the MLS is the behemoth,
Okay.
That's your $1 billion teams. And then they have the USL. Okay. So the United Soccer League. And so we have the women's team as the top league. So it competes with the NWSL. The men's team will now be a Division 3 team. And so it's cool because if you ever watched Ted Lasso, if you haven't, you should. That helps you get through hard times too. But they're adding promotion relegation. So top 2 teams move up a league, bottom 2 teams move down a league. And so it's going to add this like dramatic flair that Europe already had. And so, like I said, for me, it's just I'm a curious investor. But again, if your goal is to then go seed fund businesses, you're going to want to test a lot of businesses. And so now we've done hospitality, membership base, we've done development, right? And so I think it's given me a pretty broad swath. And so I promised my wife we wouldn't do any more. So unless it's in one of those verticals.
So are you involved in like, we need to get this player and we need to structure the team this way and do all that?
Yeah. I'm kind of the signer.
Okay.
Of it. Yeah. So I have teams. Our team goes and picks and does all that stuff. But
yeah.
That is so funny.
Yeah.
And then, so you just mentioned something interesting too. You're thinking about your weekly or your monthly cash flow, then your yearly, and then your semi-annually or whatever you said. Is that something you've learned over time to build up each of those buckets and make sure you sustain them, or how'd you come to that?
Yeah. So, again, Slumdog Millionaire, you just get in, you're like, wait a second, this is great. Flips are there, but I don't get cash for 9 months. And so then restaurants came up because I could throw an event that weekend and make $5,000.
Yeah.
Now, don't do restaurants. This is not an endorsement to do restaurants. Actually, I don't recommend it. But the idea of something so the management came up. Well, that comes every month. Gyms came up because that's a monthly membership due. And then we started adding other like kind of just cash flow channels for it.
Because we were kind of similar at the beginning. We were like, start a plumbing company. We're running a real estate brokerage advisory firm and doing all this. And then I went, Alex Hormozy?
Yeah.
Yeah, I went to the conference there and he's like, all beginner businesses try to do this and this is why you're going to fail.
Correct.
And I was like, oh shit, that's exactly what we're doing. And we shut down everything else we're doing just to buy apartments and build apartments. Do you like that idea then? Because you've done the complete opposite of what we're doing.
Yeah, then you got to track back, right? I've done over like 10, 12 years. So this isn't like happened in the last 3 years. I would argue everyone should just focus. Because the issue is you're not going to be the best at what you do. And I think you got to, if I could go back, I would have established as the best. But again, different path. Right, you're already on a path you want. Sounds like outside of running these 100 mile things. That don't make sense to me. But like my path was to get to 100 million. There's only so many lines you can run to get there. If my goal was to get 30 grand a month and retire, then yeah, I could have just done the real estate. But mine required this gasoline acceleration model, and I knew rates were low for a short time. So it's very isolated. If I could go all the way back, just get really, really good at something. Then look.
Was that vision in your head at 20 years old or whatever? Like, when did you evolve to say, because I was thinking on their family, wife, kid. How old's your daughter?
She's 10, turns 11 in April.
So has this evolved as you've matured, out of university and started to see the real world? Like, was that always like, did she sign up for that, or did that evolve?
Jesus, no. She thought I was going to be an attorney.
Did that just like slowly evolve? Like, I am having so much fun and I've become this person because you realized you're having fun doing what you do.
No, it's way more intentional. On the outside, that's what it'll look like. But no, it's kind of each of those pieces. I just realized like every deal is going to take so much cash. I can't just rely on that. I need something else operating and moving behind that circle. And so like with the gyms, it's just how it worked. I remember as a kid, I had a cousin, he would build this fort. And I'm like, why don't we have a second story? Like, that's like my life. I'm like, we look at it, my brother's like, hey, let's do the gym. And I'm like, well, it doesn't make sense to do one gym. How do you ever exit one gym? If we're going to do this, we need 3. And so it's just kind of how we looked at it. Now, what I would have been more cautious of was we had operators in place. And now before I take on a deal, I have to like visualize and acknowledge in writing that if that person went away, I would be able to step in and run it. And so what I ran into was just bandwidth compression and that's what caused most of this. Like the brokerage slowed down. Why? Because I was focusing on all the development stuff. And so what I did was go back through and say, what do I want to do with it? And found out all the parts I enjoy. And so then we just doubled down on them.
What has this been like for your wife, just tagging along on this journey?
It's terrible, yeah. Yeah, I mean, here's one. I won't make me cry, but it's like, so we're sitting at this point, and you're like, okay, you have all these people demanding money, right, at every level. And then on Facebook, we look like we're still cruising at the same speed, right? But she got her first job. She didn't want to go do one, and she's like, so I'm getting a job at Starbucks. And it took her like a week to get over like the humility, right? I own the building. The Starbucks in, but she's working at Starbucks. And I own the building, the Peyton's right next to the Starbucks. And I'm like, that's the kind of stuff where you're like, did you sign up for the ride? And where guilt hits, right? She doesn't know what you signed. Nobody knew. None of my partners knew. There's no way you can imagine we're flipping 4 homes to building 800 doors. And that's the stuff where it hits like a little different, where you're like, I'm fine living in a box. But now there's 250 employees, a family, right? And I think that's the piece where people have to make that decision for themselves, because I think that's the balance I'm finding in my life now is like, God took the joy. I enjoy the journey so much. I've never been a destination guy, but what I'm finding is that the journey is sucking that life out of me. And so it's like, how do you bring people in to help that? How do you scale it back? But I think that's the real part of where, and it was like the first time I saw her there, I'm like, what are you doing work? And I'm like, well, it's something, right? Every little bit helped. And so that, it was probably the hardest part of the whole thing.
Yeah. How do you deal with the stresses? Because you see this in a lot of like stories like yours. The wife expects you to spend time with them, spend time with the family, and you're waking up at 1 a.m., you're going to work, you're not getting home till 9. Like, how do you deal with those hard times in your relationship and like keep it going? Because most people end up splitting off at that point.
Yeah. You can only be good at one thing or 2 things of the 3, right? Husband, dad, business. So one of them's always going to lag. As much as everybody tries to do the most. So what I did was just balance my schedule around it. So I'd go to go to work. I'm home by 5. Then I'm up from 5 till she goes to bed at 9. Hang out with my wife for an hour, and then I stay up from 10 to 1. So like I just adjusted my entire schedule around that piece. And there's some days like here, I've been gone for 3 days. So there's some of the knowns with what we're doing. And so I'd say probably you just have to be on such the same page that you're on the same goal with that your spouse, with your kid. And then now we're having those lessons. I remember literally we were making so much money. I'd be like driving up and I'm like, oh, that's a cool go-kart. I think Logan would like that. Grab a $5,000 go-kart, throw it in the truck, go up the lake. And you're like, what was I doing? And so now like the discussions about money, because I don't care. Like to me, money is not a thing. It's just there. We're supposed to be a steward of it. Like I won't own any of these buildings when I'm done. I just want development to change its path to where we're not just putting people in boxes. And so when I look at it, that's been the biggest change for me, is that now it's like I'm teaching better lists. I'm learning, and there will be something that comes out of this that never would have happened if I wouldn't have gone through it. I don't know what it is yet. Could be this podcast. Who knows? But it's like that never would have happened. And so for me, that's what gets me excited every day. It's like, you don't know what today is.
Yeah. What'd that do to your body as you were just
the worst.
not sleeping?
So-
Because you're not doing that today still, I'm assuming, right?
No. So I sleep pretty well. So what you find is that your survival instinct will force you to do all the things that are bad for you when put under that stress. And what I found is I just carry a significant amount of stress and without much on it. And so what I found was I had to start moving. So it's like anybody who stops exercising is the worst thing you can do. So then now it's every morning. So I'll get up that's why I get up at 6. I go on a basically 4-mile walk. Steady walk though, it's brisk. So just tracking there. But it's cool. So we moved downtown. Like that was another big one. I had to sell our $2 million house out north that I built myself to pay off an investor and to move downtown into a project we were building that was lagging. Right. And so, but then from that, I didn't do any extra. It was the worst health I was in. Moved down there, and then every morning I get up and I walk by all 15 of our buildings. And I'm motivated by the time I get. It's the craziest stuff. But I think everybody who is not working out has to work out. Not even for getting ripped, just for health and get the
You'll
body
make more
moving.
money.
You will.
Yeah.
You will. And you give yourself space. I never believed in that either. I thought you had to work 18 hours. But now I take 2 just to think for a minute. And that's helped a ton. And then I took everything on the plate and realized you're never going to solve all that. Just pick 3. And those were like kind of the best game changer things that I think I did.
Yeah.
But I think everybody just naturally, I did at least, and then you just retreat to the point you're unhealthy. You're eating terribly. Again, mine's hard to balance because I own the brewery. I wouldn't believe a guy selling a beer if I didn't do it. And I think that your body just wants to do the opposite of what you should do.
Yeah.
And the more you can train, like that's probably what SEAL train is. It's like you're sitting in the freezing cold water with a log, and all your body wants to do is get out of there. And if you can just push through to get there, I was like, that's what people need to do. So I think exercise is one of the bigger things I changed.
Have you ever read The Comfort Crisis?
Yeah,
Dude.
that is the good one. But that's the
You
stuff.
sound like you're preaching it.
Oh,
He wrote it.
yeah. But it's like that, and because you're going to go through it, and it no matter what. When I get through this, that 220, I'm going to have riots in the streets for putting it in a neighborhood. I'm going to run into an Indian burial ground in one section that we didn't get a permit for, or something is going to come up. And I think the mistake would have been like, okay, we got through it. No, what did you learn that you can always carry forward every time you learn it? And then the other people wait till they get out to learn it. Now mine is like, okay, today, what did I learn? Well, I learned that if I can go drive in a car for 2 hours, I actually get more done than if I sit in the office.
Yeah.
Great. So then now I'm going to add in, I'm going to go on a drive for 2 hours, make calls, and go that way. And so it's just, I think a lot of times we're waiting for this aha moment. It's in your face every day.
Yeah.
Just
Right in
look
front
at
of
it.
you.
Just look at it and go and have fun with life. I think it's easier now on this part of it, but I think if I could have just told myself that advice then, I'm like, look, nobody died. It's money. You still have the assets. Let's just solve it, communicate. Oh, I probably would have been out of it by now. So,
Jeez.
It's just an honor to be in the same room with you,
just-
Jordan. This has been amazing hanging out with you. I think we're going to wrap this one up. You guys want to wrap it?
I want to run through a brick wall.
I want to go to lunch. Let's go to lunch.
let's go to lunch.
Now we're talking.
All right,
Awesome.
Jordan
Thank you,
Tampien
guys.
with 4 Degrees Real Estate. Ben, it's been a pleasure having you on Deal Junkies. Thanks again. If somebody wants to reach out to you, you can find Jordan anywhere. He's famous.
Jeez.
Find him on the front page somewhere.
Yeah, exactly. Just got to read all the articles. Don't just read the one.
Don't just read the bad ones.
Average your mouth.
All right, Deal
thank you.
Junkies, we love you. Thanks for listening. Please share us with someone you love.
Oh.
Dane wants to say something.
Well, it's our 200th episode.
Oh, my
yeah.
That's why we're celebrating
With
lunch, I thought.
milestone.
Yeah.
That-
Milestone.
What an amazing 200th episode.
Holy smokes.
Go down in the books.
Man.
Congrats on 200, by the way.
Thank you.
That is it's a feat
It's
to keep
a
going. Everybody
lot.
thinks that you just hop on here and talk, and you're like, no, you have to line up guests. You have to have creative.
Yeah, it's
thought. You
work.
gotta-
It's a whole nother business.
So congrats on that. It's a
Yeah,
big deal.
thank you very much. Thanks for being our 200th episode guest.
Honored.
Man, this is awesome. I'm excited. All right, Deal Junkies. Thanks for listening. Hopefully you listened to all 200 episodes. If you didn't, go back and listen to all of them. Tell us if we got better or worse. I don't know. We're sure having fun recording it for you, though, so we hope you're enjoying listening. Please share us with someone you love, and we'll see you next time.